The deepening economic ties between China and Africa. Just days ago, Chinese President Xi Jinping and Nigeria's President Bola Tinubu pledged to strengthen cooperation at the China-Africa Business Summit. The two leaders outlined a vision for
China has officially taken the lead as Nigeria's top import partner, with goods worth about $3.1 billion flowing in during just one quarter of 2025. This massive trade value reshapes economic ties, sparking questions on how it affects Nigeria's industries, consumers, and long-term economic future. Why China matters in Nigeria's trade story. China plays a strategic role in Nigeria's trade landscape because of its vast industrial capacity, competitive pricing, and ability to supply diverse goods. As Nigeria seeks affordable solutions for technology, consumer products, and industrial machinery, China has become the go-to partner. With Nigeria being Africa's largest economy, a steady supply of imports from China supports its infrastructure projects, energy sector, and everyday consumer markets. The growing influence reflects global supply chain interdependence, where Chinese manufacturers benefit from Nigeria's demand, and Nigeria gains access to affordable goods. This relationship matters because it is reshaping Africa-Asia economic ties, with Nigeria serving as a gateway for Chinese products into West Africa. By becoming Nigeria's largest import source, China not only strengthens bilateral relations, but also sets the stage for long-term influence in the region's economic growth and trade patterns. Nigeria's latest import data, breaking down the NBS report. The National Bureau of Statistics, also known as NBS, recently released trade data showing that China accounted for the largest share of Nigeria's imports in Q1 2025, valued at around $3.1 billion. This figure represents nearly 30% of Nigeria's total imports, far surpassing other major partners like the United States, the Netherlands, and India. Such data highlights how China's role has expanded from being just one of many suppliers to becoming the dominant source of imported goods. The report also indicates that Nigeria's overall trade deficit is partly driven by its heavy reliance on imports from China, compared with relatively smaller exports in return. This import trend underscores the asymmetrical trade relationship, where Nigeria purchases more than it sells, raising questions about sustainability and long-term economic balance. The NBS findings confirm China's top position in shaping Nigeria's import landscape. China's $3.1 billion import value explained. The much-discussed $3.1 billion import figure, when converted, equals roughly $3.1 billion for the first quarter of 2025 alone. This value is significant not because of the number itself, but because of what it represents: a quarterly trade dependency concentrated on one partner. To put it in perspective, Nigeria's import spending on China in 3 months surpasses the combined figures of several other major trading partners. This scale illustrates both the strength of demand for Chinese goods and Nigeria's reliance on external supply. The import value is also tied to fluctuations in foreign exchange markets, as Nigeria faces challenges with the naira's depreciation against the dollar. Every shift in the exchange rate impacts the true cost of these imports, making the $3.1 billion marker not just economic statistics, but a reflection of deeper financial vulnerabilities. Top products Nigeria buys from China. Nigeria imports a wide range of products from China, but some categories stand out as dominant drivers of trade. Machinery, electronics, and electrical equipment form the bulk of imports, powering industries, businesses, and households across the country. Consumer products like phones, computers, and household appliances remain highly demanded due to affordability compared to Western brands. In addition, Nigeria relies heavily on China for vehicle parts, construction materials, and industrial tools, essential for infrastructure development and local manufacturing. Textile and plastic goods also rank high among imports, fueling Nigeria's retail and wholesale markets. These goods fill critical gaps where local industries either lack the capacity or are too expensive to compete. By supplying both high-tech and everyday essentials, China has positioned itself as the indispensable supplier that supports Nigeria's consumer economy and large-scale development projects simultaneously. How China overtook other import partners. For years, Nigeria relied heavily on Western and Middle Eastern partners for its imports. However, China gradually overtook them by offering cheaper alternatives, extended credit terms, and faster delivery times. Unlike European suppliers who focus on quality-driven exports, China combined affordability with accessibility, capturing Nigeria's price-sensitive market. Additionally, China invested in long-term trade relations, establishing agreements and infrastructure support projects that strengthen trust. While countries like the United States still play a role, their import volumes have been overshadowed by China's ability to supply both bulk commodities and advanced technology at scale. The aggressive expansion of Chinese companies into African markets also created distribution networks that gave them a competitive advantage. Over time, this consistent dominance allowed China to surpass traditional players, cementing its position as Nigeria's leading import source and reshaping the country's international trade hierarchy. Impact on Nigeria's manufacturing and local industries. The growing flow of Chinese imports has mixed consequences for Nigeria's domestic industries. On one hand, access to affordable machinery and raw materials helps local businesses scale faster, boosting sectors like construction, energy, and agriculture. On the other hand, cheap finished goods from China often undercut local manufacturers, making it difficult for them to compete on price. Nigerian textile and small electronics producers, for example, have faced steep competition from low-cost Chinese alternatives. This dynamic creates both opportunities and challenges. While consumers benefit from lower prices, local entrepreneurs struggle with market share. Additionally, reliance on imports discourages innovation and self-sufficiency within Nigeria's economy. For Nigeria to thrive, policymakers must strike a balance between leveraging Chinese imports for growth and protecting domestic industries from becoming overly dependent or overshadowed by foreign products, technology, machinery, and consumer goods dependence. Nigeria's imports from China are dominated by technology, machinery, and consumer goods, shaping everyday life and national development. Industrial equipment from China powers construction sites, energy projects, and manufacturing plants, while electronics and household products fuel demand in the retail sector. Smartphones, laptops, and home appliances are particularly popular, creating a reliance on Chinese innovation for digital connectivity and lifestyle improvements. This dependence ensures affordability for Nigerian consumers, but raises concerns about domestic capacity building. Local companies often struggle to produce competitive alternatives at similar scale and pricing. The reliance also extends to vehicle parts, agricultural equipment, and building materials, which are critical to infrastructure growth. As Nigeria continues to develop, this supply chain relationship highlights both the advantages of cost-effective access to essential goods and the long-term need for diversification and local production capabilities. Nigeria's trade balance, exports versus imports with China. Trade between Nigeria and China is heavily imbalanced, with imports far exceeding exports. While Nigeria buys machinery, electronics, and manufactured goods in large quantities, its main exports to China are primarily crude oil, gas, and raw materials. This imbalance creates a situation where Nigeria's earnings from exports do not fully cover the rising import bills, contributing to a persistent trade deficit. The structure of trade reflects Nigeria's reliance on commodities, while China benefits from added value through manufactured goods. Such an unequal exchange can affect Nigeria's foreign reserves and overall economic stability. To address this, Nigeria needs policies that promote non-oil exports, such as agricultural produce, processed foods, and finished products that can appeal to China's market. Strengthening export capacity would help reduce the gap, ensuring that the trade partnership is more mutually beneficial over the long term. Opportunities, jobs, infrastructure, and tech transfer. The deepening trade partnership with China presents major opportunities for Nigeria. Beyond imports, Chinese companies are increasingly investing in infrastructure projects such as railways, roads, and energy facilities, creating thousands of jobs. Technology transfer is another benefit, with Chinese firms introducing skills in engineering, ICT, and industrial production that can strengthen Nigeria's workforce. Local suppliers and contractors often gain contracts on these projects, leading to wider participation in the economy. Moreover, increased access to affordable machinery enables Nigerian entrepreneurs to expand small-scale industries and participate in global value chains. As Nigeria pushes toward industrialization, these collaborations can support long-term development goals if agreements are designed to favor local employment and knowledge sharing. Harnessing these opportunities effectively requires strong regulatory frameworks that ensure Nigeria gains more than just imports, but also lasting economic. What this trade shift means for Nigeria. Looking ahead, China's dominance in Nigeria's imports will continue to shape the country's economic trajectory. If managed well, the partnership can accelerate infrastructure growth, boost technology adoption, and improve consumer access to affordable goods. However, the current imbalance raises concerns about long-term sustainability. For Nigeria to benefit fully, it must expand exports, strengthen local industries, and negotiate trade terms that encourage knowledge transfer rather than dependency. Regional integration through initiatives like the African Continental Free Trade Area, also known as AFCFTA, could also provide Nigeria with opportunities to leverage Chinese imports for regional re-exports, creating new revenue streams. Ultimately, the future depends on policy choices, whether Nigeria uses this trade shift as a stepping stone toward industrialization, or whether it becomes locked in a cycle of import reliance without domestic transformation. Nigeria's growing dependence on China will shape its economy for years to come. The big question is whether this partnership drives growth or deeper reliance. If you found this breakdown useful, hit like, drop your thoughts in the comments, and subscribe for more global trade insights every week.